Good morning, good afternoon, everyone. Welcome to the 62nd Emerging Growth Conference, day one of our two-day super virtual investor conference. I'm your host, Anna Berry. Just a few notes. Today we'll be running until 4 p.m. Eastern time. And when we switch to the next company, you'll see a black screen for a moment, but that's just us moving over to the next presenter. But if you do experience downtime, refresh your browser and everything should work properly again. Our platform does work best on Google Chrome. So if you're watching from an Apple device, you have to hit the play button to start the session. Now, all of our conferences are uploaded to our Emerging Growth Conference YouTube channel. So subscribe there, youtube.com/Emerging Growth Conference. Now, today, during each company's presentation, you can submit questions through the webcast module, and the presenters will attempt to address as many of these as possible at the end of their presentation. All right, let's begin. Citizens, Inc. It trades on the New York Stock Exchange under the symbol CIA and is a diversified financial services company providing life, living benefits, and final expense insurance and other financial products to individuals and small businesses in the U.S., Latin America, and Asia. Please welcome Vice Chairman and CEO Gerald Shields and the CFO Jeff Conklin. Nice to see you, gentlemen.
Nice to see you.
Nice to see you.
All right. Well, thanks for starting off our conference today. The floor is yours, and call me back for questions.
Great. Thank you, Anna. So we're excited to be talking to you all this morning. We think we have a really interesting story to tell, and proud of the accomplishments of the company. And I think you'll be intrigued about the company. So the next slide, if we can. So obviously, safe harbor statements there. So one thing I like to start with is kind of say who we are not. A lot of times people confuse us with the Citizens Bank. We're not Citizens Bank. We're not the Citizens Property and Casualty Company of Last Resort in Florida, nor the Citizens Property and Casualty Company Last Resort in Louisiana. I actually got on the elevator the other day, and we're in a building that is all Amazon except us. We have the 15th floor. When I got on, someone said, "Hey, who's in the 15th floor?" And the guy on the elevator said, "I don't know, it's some bank." And I said, "Nope, it's not a bank. It's a life insurance company." So we start this off right here. So if you say we're not those, so who are we? So we are go to the next slide. We are a life insurance company, and we specialize in a few niche markets. So we don't try to be all things to all people. There's certain things that we do exceedingly well, and we want to continue to grow those and do those. We offer traditional life insurance, endowment products, and final expense products to niche markets where we believe we are able to achieve a competitive advantage. We're a very strong financial company, $1.6 billion in assets, over $4.8 billion gross insurance in force. Any day now, we'll go over the $5 billion mark in gross insurance in force. So we're not a tiny company. We're in 70 countries with over 2,000 independent agents. And to be honest with you, the number of independent agents are growing every day. We're in 70 countries, and so we have a diverse spread there.
We run our business primarily through two insurance segments, a life insurance segment and a home service segment. You can see the life insurance segment is approximately 72% of our business and our premium revenues. That business is really focused on U.S. dollar denominated policies, primarily in Latin American countries, but we do also sell in Taiwan. We focus on upper middle class in those demographics, where we receive typically premiums on an annual basis, which can reduces kind of our expenses, administrative type expenses, and actually accelerates cash flows, get our money invested into the market sooner than later. On the home service segment, that's more in the Louisiana, Mississippi, Arkansas market. We have limited underwriting risk there. It's focused really on the middle and lower income households, and where we sell primarily kind of our whole life product. And then we've more recently launched a critical illness product. Back on the left side real quick, the life insurance segment, we are bringing the expertise that Gerald will share here in a second into our domestic side of our life insurance space, where we have, we're in about 32 states that we're licensed in, that we're going to start growing in our domestic U.S. operations.
So we've been in operation for over 50 years, so we're not a new company. We're an exciting company, and we are growing, but our international market, we've been servicing that for 50 plus years. And with that, we have really superior customer service in the Latino cultures and language. You know, a lot of people, and I've been with a lot of different insurance companies, but they get in and they go down to the local college. We're in Austin, so they'd go to UT and they'd hire 4 people who speak Spanish and put them on the phone and say, we're now in the Spanish Latino market. That's not what we're about. We're about really having people who understand the culture, and we can do end-to-end transactions, end-to-end servicing in Spanish, Portuguese, Mandarin, and English. And again, that's not just the language. So if you were to go to our call center, we have people from Taiwan there. We have people from Colombia, from Ecuador, from Puerto Rico, from Cuba, from Venezuela. So we have people who identify with that market and can service that market. We have long-standing relationship with strong brand recognition in Latin America community. I think one of the things over the last 3 years that has really changed for us is our product development expertise. We are recognized for high-quality products that offer living benefits that really meet the customer needs. And when I talk about this, I'm real proud of how we're a little bit different on this. In the last 24 months, we've introduced 23 products. So it really is a core competence of us to be able to go and bring out products and product expertise that meets the needs of the independent distribution channel. One of the things our products do is we do dollar-denominated insurance products in Latin America. And this is unique because the way the economy is in Latin America, in South America, they want to get their money into US dollars for protection. So when everything that we sell in South America, or our international business, is priced in US dollars, the funds are given to us in US dollars, and we pay claims and we accumulate value on these products in US dollars. Really different and really, really resonates with our customers and the population there. We have a huge international agency force, 2,000 plus. We're talking with major brokers who will double that over the next couple of years. So we're excited about that. We have a very tenured distribution network. A lot of 25 to 30-year experience. Now, I say all that, but then this week we have people in from Argentina, Ecuador, Bolivia, Paraguay, and they're new agents who have been with us for 2 years or less. And probably the average age in that room is probably 28 years old. So when I say we have a lot of tenured, we also have a lot of youth coming into the company. And we believe one of the differentiators that we have is being very collaborative with the field and very agile in order to adjust and move on a dime. Next slide. Okay, so why do we believe that we're really positioned for growth? And I firmly believe this. I said something yesterday to the new field force, and I said, I wish I was 45 years old because the exciting times of this company are ahead of us. And I wish I was young enough to be able to go the next 20 years to see what happens. This US dollar denominated products is a huge competitive advantage. If you know anything about South America or Taiwan, there is a big desire to get their money out of their local currency. So that is less prone to sudden geographic shifts that if we were in there. We have no currency gain or loss based on conversion ratios and things like that. So that's really big. Our expertise in the Latino market. So Jeff mentioned this, that we're taking what we've done in South America and we're bringing it to the domestic market. You know, the Latino market in the United States is the fastest growing demographics we have. So there is this hunger for products and services to first and second generation Latinos. And we have a group we're working with now, and that's all they service at. And the man who's over that came walking to our call center, and he stopped over our call center and he teared up. And I looked at him, and I've known him for a while. I said, "Is something wrong?" And he says, "You all understand Latinos. You all are unique in that ability." He said, "I've been to a lot of insurance companies, and they all talk the talk, but they can't walk the walk." That is really something that we think will be a great growth opportunity for us. We also have some niche markets. One thing we have is white label products. So we have a line of products that are that a broker or an IMO can come to us, and we can label these products according to their company's logo and their product. So it looks like it's unique products to them. The people we're targeting on that would be agencies, brokers, IMOs that get about $50 million, $20 to $50 million a year in revenue. You can't go to one of the big guys like New York Life or AIG, and they even talk to you about something like that. So for us, that is a growing niche. We also have a really fun business that's to professional athletes. And I'll talk mainly, when I say that, soccer and baseball that comes out of South American and Latin American countries. I talk about our products. That says over 20 products. I think it's actually been 23 products we put out, and some pretty unique products that really, we partner with our brokers to get products that they really see a need in their market. And our geographic distribution. We're in over 32 states already. So if you look at our growth strategy, we believe that it really focuses on, so while we have three markets, again, the international, the home service, and the domestic, we believe that we actually have three levers to influence those markets. And so across those three markets, we have three levers, which is the product. Do we have the right product? Do we have competitive price products? Second one is promotions and campaigns. You know, with Salesforce, you constantly need to be motivating them through the right promotions and pay systems. And then we have process and technology improvements. So of course, across those three markets, international, home services, and domestic, we're looking at what products do we put across there, what promotions do we put across there, and what process and technology we put across there to grow business and make it easy to do business with us. And we do a lot of cross-pollination. So we may introduce a product for home services, like we did with critical illness. And then a few months later, we take that critical illness to the international market. So we're able to cross-pollinate across those three markets.
With our strategic goals, we've really had some really good accomplishments that have happened in the first half of 2023. A couple are highlighted in bold, but I'll start on the left. We have a 64% increase in our amount of issued insurance, new business issued in 2023 compared to 2022 for the first half of 2023. Our first year sales are up 12% the half year 23 versus prior year. In the middle, once again, this is kind of the third or fourth time we're saying it, is our ability to do U.S. dollar denominated products internationally. And then, disciplined expense management and capital management. We have consistently had net operating cash flows. We have no debt. We have an excess credit line of $20 million. And something that we're very, very proud of most recently that occurred in July is the bottom right-hand corner of this slide, which is we received our first AM Best rating for our strong balance sheet in our main domestic insurance company called Seca Life Insurance Company of America.
So let me make a comment here. There's a lot of really exciting things happening here. The 20 new products, the amount of insurance that we've issued. So I spent a good part of my career at Aflac. I was Chief Information Officer, and I compare where we're sitting today to where Aflac was sitting when the duck came out. Prior to the duck, nobody knew who Aflac was. When the duck came out, the salespeople would tell me, "So Gerald, I'm getting calls from people all the time about what products and services we offer." That's what's happening to us now. We are getting calls from medium to large brokers, agencies, IMOs, inquiring about us, wanting to do business with us. And it's really a deal where, to me, we need to manage our growth properly so we don't implode on that. I was actually hired for Aflac because the duck was just coming out, and they saw this huge expansion. How are we going to keep up with it? I equate that is the same feeling I'm having here as when the duck came out.
I'm going to add two more slides. This is just a depiction of the 64% increase in our MARTA issued in force, which is driven by our new and innovative products, selling campaigns, and really growing our distribution relationships. Last slide I want to hit is book value per share and shareholders' equity. You can see our book value per share, excluding what's called other comprehensive income, which is really fair value marks on your assets. Removing that, you can see that our book value per share has grown in consecutive year and the last 2 quarters overall. So I think we can hand it back over to Anna for Q&A. Anna?
So
yeah,
I know
great
we
job.
hit that fast. I know we hit that fast, but we wanted to really get to your questions.
Well, yeah, great job, gentlemen. Let's talk a little bit more about that AM Best credit rating. Discuss your path and the execution to earn these ratings. Can you talk more about that?
Yes. So the company never before had really had an AM Best rating, any sort of rating. And with our growth in the domestic market, we really believed we needed to have a rating. International is not as important, okay? Although I've been surprised at how much it resonates there. I've talked with probably 300 of our international agents in the last 2 weeks, and every one of them, every session I'm in, they talk about the AM Best rating. So it's something they're very proud of. So we felt like the first thing we need to do is clean up some of our business and get some strategic plans in place such that we would be able to go and get the rating. We got a B++. I've talked to major brokers in the U.S. since then, and all of them are highly impressed that out of the gate you got a B++, and they all say how surprised they were that we were that strong. That shows our financial position. It shows our capitalization. It shows our financial management. It also shows the potential growth. We need to show a history of growth. We need to show a history of performance. And we will be on path to get an A rating within the next 24 months.
Fantastic. What are the biggest revenue growth drivers looking out to the next 12 to 24 months for you guys?
So first, I'm going to tell you, I'm an execution person. To me, it's all about execution. The drivers for us are to do the things we say we're going to do at the quality level that we say we're going to do them, at the time we're going to do them. And that comes with, we have a couple more products we need to refresh over the next 24 months. That'll be big drivers. By the way, in our international market, about 62 to 65% of our revenue comes from our new products. So we have a couple more that we need to refresh. That's going to drive it. And distribution growth. Our biggest constraint right now is good distributors, both in the U.S. and international. We have meetings scheduled this week on some growth patterns for distribution that could be significant growth.
And can you talk a little bit more about that? You mentioned the products and the distribution. So where do you see these and how do they contribute to the revenue growth that you talked about over the next 24 months?
The only thing I would add to what Gerald's last comment real quick would be, is if you go look at our press releases over the last kind of 9 months or so, we've actually been announcing new distributors, and that is once again key to growth. Is as everybody knows in life insurance, you have to sell, and we are a manufacturer of life insurance products, and we need agencies to sell for us. And I think we've shown a pattern of about, I think it's 4 or 5 press releases specific to new distributors and growth. So
I think that the products, replacing one of our big products that's a little bit stale out there, I think that could have significant growth into the second half of next year. When I say significant growth, I think it could be millions that it brings to us. As far as distribution, that's the key. And we have several initiatives with new brokers internationally that we really haven't played in that market before. And we really see that. We have a new compensation model that's rolling out the first of the year to compensate people for bringing good brokers to us. Each broker will be committed to getting at least $800,000 of revenue per year. So you can see you can go get 4 or 5 of those and significantly change the landscape. On the U.S., as Jeff said, we brought in 5, I think, new distributors this year. We are in talks, and it's not a done deal, and they could all fall apart, with 3 significant distributors now that will be bigger than our domestic business today.
Well, that's exciting. Can you talk a little bit about your competitors? Who are they? And what's your competitive advantage?
So I'll say, let me talk about in the international market. We really don't have many competitors in the international market, and definitely none that have the size. When I talk about that, because of our unique position of being U.S. dollar denominated. And so from that standpoint, there really are no large players, people as large as we are, that play in that market. And so from that standpoint, I actually said something to the international market last week when I was in Colombia and Ecuador about the competitors, and they all started laughing. I said, "What's so funny?" And they said, "Joe, we don't see any competitors because nobody else is doing the dollar-denominated products." Okay. I told them, don't kid yourself, everybody in the world can be a competitor, right? So right now we don't see that. In the U.S., it's very competitive in the U.S. insurance market. So we think that, to some extent, everybody's our competitor in the U.S. However, because we're concentrated on the small to mid-size agencies and brokers, not many people are playing in that with specialized products and the white label. I mean, we're talking to somebody now about the white label, and they say, honestly, I've talked to probably 7 or 8 insurance companies, and nobody else will look at that for me. And that's going to be a unique position for me. So we think in the white label for these $50 million a year and below distributors, we've carved out a niche, and I want to stay in that right now.
Thank you for that. You say you're in multiple countries. So is there any country risk in this business? Anyone's in particular?
There's definitely country risk. So in South America, it's really interesting. In South America, some of the socialistic governments that come to power. So we'll take Ecuador. Ecuador elected a socialist, and that changes the dynamics of the country. And when that changes the dynamics of the country, some of our agents are upset. Their life's upset, the inflation, whatever. When I talk to our agencies about it, like Colombia went really far left. And I was talking to the head of Colombia last year, and I said, I really pray for y'all. I really think of y'all and everything. And, it's really hurting your company or hurting your country. And the head of that laughed at and said, Gerald, it really hurts us from a citizen deal, but it's really good for your business. Mm-hmm. And I said, why is that? He said, because when that happens, that country risk, drives people to want to take more of their money outside the country. So it's kind of a double-edged sword on that. I don't know if I answered your question, but.
Well, you did, yes. Will citizens be barred from certain countries due to anti-American sentiment?
Not much, because we don't have Americans in the country selling. It's all locals and people have relationships. So that kind of protects us from that.
We have a few minutes left. Dayton Holder wants to know how you're growing the business. Specifically, which agencies does your sales team target? And are you going after the Goldman Sachs of the world or more boutique investment houses?
So you answer I'll say on the agencies, we're going after in the U.S. the agencies and IMOs that are $50 million a year in business. So we're not going against the Marshes and the McLeans and those type people. Okay, we don't think that we play well in their space. And I've been in their space, so I know that. In the international, we're going against, we're targeting independent agents who have a lot of relationships, who have financial services experience, and brokers who can bring $800,000 or more per year in business.
Thank you for that. Anything else on that question?
I didn't understand the question about Goldman Sachs.
Just, I guess, where you're going after some investment houses, the more boutique or the big guys?
It's more at the boutique.
Boutique.
Yep.
The boutique.
Carolyn Sheff asks, does management like that most of the shareholders are policy holders? And do you think that creates a problem for liquidity? And that's also a reason for less than 10% ownership by institutional investors?
That's a very profound question. That's really a great question. Does management like it? You know, I'm old enough that I think that, you know, there's no silver bullets and everything has two sides to it. I like it in the fact that our policyholders and our agents really believe in the company and they want to be owners in the company. That is a good feeling. That is a good feeling to think that to our policyholders, to our agents, they buy into philosophically and with their dollars into the company. So that's a great feeling. It does, I think, make our stock a little bit unique in the fact that we don't have as big of institutional investors. So it may be a little bit more volatile to the individual retail market. We really want to drive much more institutional investment. You know, we would like to see at least double our institutional that gives more stability to the stock. It gives more liquidity. It makes it a better value. So that's what we're doing.
I think just to add, so we were actually above 25% a few years ago, but we were reconstituted out of the Russell 2000, 3000 index, which required some of those institutions to redeploy their indexes. And so we went from 25% in 2022 down to the 10%. Or it's actually, I thought it was like 13% right now, but
it's like 13.
But that happened. There was high valuations in a lot of the techie companies, and we came below the minimum threshold. So
yeah, it wasn't necessarily anything we did. It was just a market adjustment. I will say that we're very well capitalized, and again, we have a line of credit which we've never tapped into, and we have no debt. No debt.
Well, with that, Marcel asks, talking about your recent quarter, notice that for the 3rd and 6 months ending June 30th, your sales are flat. He's asking, have you plateaued? And if not, what is the catalyst that will propel sales? Is it new products, marketing? What's your plan?
Well, a couple of things. One is sales are up. I'm not sure they've necessarily plateaued, but if you're looking at total GAAP revenues, 90% of our GAAP revenues, premium revenues, are actually renewal year premiums. And I think Gerald touched on our retention initiatives to keep the renewals coming in. It's very critical to an insurance operation.
So let me just, sales are up.
And sales are
new sales are definitely up. So they are not flat. Revenues are flat because we've been in business for 50 years. And back a few years ago, we weren't growing sales. So like 5 years ago, we have a large block of business that the last couple of years have been maturing. So someone goes and buys our product and they keep our product for 30 years and they accumulate cash value. And then they decide to retire and they take that money. We're almost through that hump of where that happened. But that's the reason that first year sales are important, is to be replacing those people who mature. And listen, we're an insurance company, and what we say is insurance is a promise and Citizens a promise kept. So if someone, and if you bought our product for 30 years and you've been investing and putting money in there for 30 years, now you decide to retire, we're thankful that we were able to protect your retirement and put that in US dollars. So it's kind of good news that people stayed with us that long and had that much faith in the company. So when we get through the next couple of years of that higher maturity with the aging population, it'll be better. Continued growing first year sales helps shield us against that.
Perfect. We have a lot more questions for you, but we are out of time, so we'll send them to you so you can answer on your own. But great presentation. Thank you so much for joining us, and we'd love to have you back in the future with some updates.
Great. Thank you.
Thank you.
Yeah, have a good day.
All right, you too. All right, stay with us, everyone. We'll be right back.